Hi there, smart traders, and welcome to another weekly market review. My name is Francois. I'm the senior analyst and trading specialist here at Smart Online Trader, a division of Diversity Smart Trade College. Just a little bit about myself before we get started. I am a licensed FSCA financial advisor and trader, and I've also been in the financial industry now for an excess of 7 years. So I'm going to be taking you through what happened this week. And we are going to also maybe have a look at some potential trade setups for next week. But before we do that, should you be interested in learning more about online trading, feel free to visit our website. The link is in the description below, where you can have a look at the online learning that we offer. There's an excess of 14 course modules, ebooks, etc. We offer 24/7 support and coaching, as well as weekly online trading sessions. Just to show you a little bit, this is our first 5 basic modules that you will obviously gain access to, as well as the first 6 of 9 advanced modules that you will also gain access to. As I said, there is some ebooks as well. And as an additional bonus, there is also daily market analysis videos posted by our senior analysts and myself as well. And to make it super easy for you, we have various payment options and membership options for you to choose from. But as a bonus for you attending this session, in the description below, there is a 5-day free trial for you to test our services, obligation free, cancel at any time. Just click on the link in the description to access that 5-day free trial. So let's get into today's session. Before we do get started, kindly just familiarize yourself with the risk disclosure currently on your screen. Bear in mind that everything that we are going to cover during this video is my opinion of the market and should not be taken as financial advice. Should you want to read this disclosure in more detail, it is also available on our website. So starting things off with our economic calendar, having a look at what happened during this week. There was a lot of focus on the European markets, with both the European zone and the Great British inflation rates that was coming out this week. We also had the Australian unemployment rate, and that was basically, the most important part. There was also the Canadian inflation rate that came out, but, just that European and Great British inflation rate, that was our primary focus for this week. With the Great British inflation rate coming out with double digits, coming out at that 10.1 figure. The Eurozone inflation rate also rose, but managed to escape that double digit, hitting a 9.9. So just having a look at the actual charts here, we can see the dollar index not having the best week. So we started off the week on Monday with a major drop in the dollar, as you can see over here. During the mid part of the week, so that was around Wednesday, we saw some bullish momentum coming into the market. On Thursday and early Friday, it was looking extremely promising, but at the end of the week, the dollar closed lower than it did last week. Also then looking at the Euro USD for this week as well. Here you can see, very similar to the actual dollar index, that the euro rose in the early part of the week as the dollar weakened. It did obviously find resistance at the top of this resistance level, which was also the top of our channel here, just missing the top part of that channel, then spiking back down, but ending right back at this resistance level over here. And now a very interesting level for us to be at going into next week's trading, because if we can continue to trade below that resistance level, we can look for trades back down to our support level over here. However, should that resistance level be broken, as well as that zone or channel be broken, which also then would break our daily 50 EMA over here that could see us, with the euro pushing up to higher levels around our resistance level, which is also those higher levels that we achieved in early September this year. The pound was obviously, in primary focus during this week with the resignation of the Prime Minister, Liz Truss, which literally happened 45 days after she was appointed. And we can see here, even though the Great British inflation rate achieved double digits, it didn't really phase the currency, and we still had some bullish momentum coming into the market. And this showing us very, very promising data going into next week, with the potential to now spike up to the top part of our channel, which will also then correlate with our 72 daily EMA, from of where we can then start looking. If it breaks out of the channel, we can start looking for those higher points. So looking for additional buying opportunities, or even higher to, achieve new monthly highs around this resistance level over here. But should it find support or find resistance, at the top of this channel, we can then start looking for selling opportunities back down to our support, and also back down to the bottom part of our channel as well. In additional currency news, the USD JPY pair exceeded its psychological level of 150 this week, reaching levels that have not been seen since 1990. The major pair traded as high as 150.5 during Friday morning, as we all awaited the Bank of Japan's intervention. I know even on the trading channel, we did send out short positions. However, our analysts didn't believe that it would push that high up before the intervention took place. So unfortunately, we did trigger a stop loss. However, here you can see during the later part of Friday trade that the Bank of Japan intervened, and we had this massive downward spike again on this specific instrument, making it a super volatile trading pair at the moment. But if executed correctly, massive profits possibilities on this specific currency pair. Here we can see it on a daily time frame, all the way as it pushed down to that lower support level, but still having a lot of room to run. So here we can see, very similar to the previous time that the intervention took place, the daily candle looking almost exactly the same. So now waiting to see what is going to happen here. Are we going to have a repeat of history where we'll see the JPY pushing or losing strength again exactly the way it did the previous time? Or is the Bank of Japan's intervention going to lead to additional gains within the Japanese yen, and we can actually see this pair push down now to this lower support level over here, or even further down to the bottom of our channel? Definitely very interesting to have a look at during next week's trade. Then moving over to crude oil, Biden's administration obviously raising efforts to bring the oil prices down ahead of the midterm elections coming up in the US. So this obviously just happening weeks after the OPEC plus countries decided to cut production by 2 million barrels per day. However, Biden announced plans this week to sell off from the nation's emergency oil reserves in a bid to counter rising fuel prices. However, despite the news, prices actually rose during the mid part of the week, with tighter supplies and news that China is considering lightening their quarantine restrictions. As you all know, China is currently still in lockdown due to COVID-19 restrictions. So it's actually caused this specific commodity to start reversing around Wednesday, and we could see that it's showing some massive bullish momentum at the close of Friday's trade. So now going into next week, if this support level holds, we can definitely see additional upside on this pair to this previous high point over here. Or if this breaks back into the channel, then we'll see lower lows on this pair being created. So as well, massive trading opportunities on this commodity going into next week. Then having a look at the US stock market. So US stock rallied at the start of the week as earnings season kicked off with a stronger than expected start. The financial sector outperformed on Tuesday with a strong stretch of bank earnings from Goldman Sachs, JP Morgan Chase, Bank of America, and even the Bank of New York. Johnson & Johnson helped extend this market rally after strong earnings as well, with the Dow Jones adding in excess of 330 pips for that specific day, and this was on Tuesday. However, rising yields on Wednesday brought the equity market a little bit back down, with the 10-year yields trading as high as 4.1%, its highest since 2008, suggesting that fears are still intact. This, however, did not stop the stock market, and we saw this massive bullish momentum within the market, having a 5% rally for the week, with the Dow Jones closing at that 5% higher point than where we opened on Monday. Looking at this pair from of a lower time frame, so here we are on the daily time frame, and on the daily we can see that we were in this smaller channel over here, and that channel has now been broken and retested. So during the early trade of next week, we can definitely expect further upside potential to our resistance level over here, which, should that be broken, we will be able to then aim for our previous high points that we saw during mid-September. Finishing things off with cryptocurrencies, Bitcoin and Ethereum are two major cryptos, showing very little movement during this week that has passed, and trading was relatively flat. And seeing that Ethereum is still within this bearish rectangle over here, our EMAs on the daily still being extremely bearish, and we are literally just waiting for this break at that 1,280 level for us to then aim for new low points on this specific crypto, aiming for this support level over here, which would then be the same lows that we saw in the middle parts of July this year. So traders, that's it from me from today. If you would like to get in touch with us, our information is on your screen at the moment. It is also available in the description below. Just before you go, if you haven't done so yet, please remember to smash that like button. And if you haven't subscribed to our channel yet, please do so as well. We'll really appreciate it. I'll see you guys all next week. And as always, may the peace be with you. Cheers.